Sachin, for joining us here on ET Now. First things first, now Moody's upgrade has come in. China has also decided to cut its lending rate. And of course, China and the United States are engaged in a slew of discussions with respect to the trade deal, the interim trade deal that they signed. How do you expect all of this global market action to have an impact on the India market?
Yeah, hi. Thank you so much for having me on the show. So I think the good thing is that the trade war that we were all witnessing for the last few months, I think the intensity over there seems to be cooling off quite significantly uh, from US with most of the countries. So I think that's a very positive thing. And I think Indian companies, obviously, wherever we have a strong value proposition from each of our businesses, this is what I mentioned a few times even earlier on the show, that wherever we have our strong value propositions, whether it's specialty chemicals, pharmaceuticals, textiles, electronics manufacturing, engineering, quite a few other industries, I don't think there is going to be any challenge over there. Clearly, US corporates are looking at global alternate supply chains are getting created, and multiple countries, whether it's India, Indonesia, Vietnam, South America, whichever company or whichever corporates will have their own strengths, they will get their share of business. So I think that's a mega trend that we are going to witness over the next 3, 5, 7, 10 years, and we strongly believe that will continue over the next few quarters. We'll see significant amount of order books flowing in for some of our corporates out here.
Sure. Sachin, hi, afternoon, Kavita this side. So, can we also say that, we've moved from the phase of from chaos to clarity, because the world is reshuffling and India definitely is standing out. The kind of cues and triggers you just mentioned, the kind of sectors that's going to benefit now. Do you think among the emerging market pack, India is definitely going to stand out in a couple of quarters time frame that you just mentioned?
Well, we definitely believe so, and it's not that we will have a share for all the businesses, but at least there are 7 or 8 sectors where we believe that Indian corporates have the right to win. They have demonstrated that they have the domain expertise. They have demonstrated that they can deliver the scale for the global demand, and where they also respect the intellectual property rights. So whether it's auto ancillaries, specialty chemicals, pharmaceuticals, electronics manufacturing, engineering, within engineering, I would say hardcore engineering, power equipments, textiles. So these are few sectors where we believe that uh, Indian corporates, Indian companies have clearly demonstrated the right to win. And over the next 2 to 3 quarters, very clearly you will see we are really standing out in terms of our incremental market share that we are going to gain over the next few years.
Right, so you're suggesting, Sachin, that there's going to be an incremental market share that India is going to corner with respect to the other emerging markets. But is that the view that you hold for FIIs as well? And of course, now that, at the moment, the India-Pakistan, skirmishes, well, both sides have agreed for an understanding, a larger understanding. Minister Piyush Goyal is also in the United States. But what could be the next big trigger for the Indian markets, to sort of have a disproportionate movement?
Right. So as far as foreign institutional investors are concerned, I think the trend is clearly reversed there. We can see both for the month of, I think since the month of March, April, and even May, we are seeing significant amount of positive flows, uh, on a continuous basis, right? And even if you see some of the hardcore data, the selling started sometime in, I would say, September 24 or October 24. They sold almost worth 2 lakh plus crores from October till February or March. And that was the number that they had bought from January 24 to almost September 24. What I'm trying to say is that the hot money which had come in probably went out and it got all more or less settled. And now we are seeing very decent amount of very, very stable long-term money, which is where we are getting decent allocations, where these are investors who are really looking at the mega trends that's going to play out. Of course, we all know that India economic growth, I mean, the GDP growth is going to be one of the highest in the world. And even from a political stability, I think we are one of the better placed countries today globally. So I think a lot of factors are moving in. I think one other important thing that we need to really also see is, uh, which is reflected in the bond markets, right? If you see the 10-year US Treasury yields, and if you see the 10-year India G-Secs, if you go back to almost 4 or 5 years back, what used to be a gap of almost a spread of almost 450 to 500 pips has now narrowed to under 200 pips, which is less than 2%. And this has been structurally coming down over the last 12 to 18 months or over 24 months now. I mean, just about 250 pips to 200 pips. So I think that's again a very big positive, which is also again reflected in the currency stability that we are seeing. And I think globally also what we are seeing is that now the new term that everybody is talking about, anything but USA, the ABUSA. So I think again that is going to be beneficial to countries like India because we offer the growth, we offer the political stability, we offer good corporate governance as far as a lot of companies are concerned.
Sachin, let's also talk about the overall earning numbers. What sense are you getting? How would you like to rate it, across the market caps? And also, since we're already talking about sector churning and sector rotation, any major theme that might dominate this entire calendar year for you?
So I think the earnings season has been much better than what it was feared. Let me put it that way. That's point number one. Point number two, I think even if you look at sector wise, right, whether it was banking, financial services, even in selectively, I think with auto and auto ancillaries, I would say even IT companies were not so bad. In fact, some of the IT companies have had continue to have very large order wins, right? Both pharma and healthcare continue to deliver very, very good results so far. Uh, yeah, so I think except for maybe some bit on the consumer or that too on the staple side, I mean discretionary consumption, I would say there is a mixed bag. But non-discretionary consumption, there has been a still continues to be a little lag kind of a impact. So I think broadly, to my mind, the earnings season is very decent. The outlook by most of the businesses also continue to be fairly optimistic. So I think if one selects a decent set of companies, it will not be very difficult to generate a 15 to 20% earnings growth at the portfolio level for the next 2 years.
Right. Sachin, let me also ask you about the downgrade that's coming for the US economy on the back of their rising debt levels. And that came in from Moody. Of course, there were earlier downgrades as well from S&P and Fitch Ratings as well. How much of an impact and how concerning do you think that's going to be for some of the export-based sectors, for example, IT?
Well, we actually this is the downgrade is at a country macro level debt, but the customers that some of our IT companies deal with, whether some of the large financial institutions, manufacturing companies, retail companies, if you see their balance sheet, they are in a very very strong situation. In fact, for the last 2 3 years, all of them have been creating a tremendous amount of war chest in terms of their cash holdings. So they all are sitting on significant amount of cash piles, right? So we are not worried as far as the export businesses are concerned for the businesses that we are talking about, whether it's IT services, specialty chemicals, pharmaceuticals, auto ancillaries. I think they all are going to get significant amount of order inflows and execution. I mean, I think in IT services we've seen some slow down as far as the execution is concerned. But our sense is in the second half of this calendar year 25, we should be able to see some amount of pace coming back on the execution also.
Sachin, for the purpose of diversification, what would you advise our viewers? Would you advise them to stick to India for now, as far as global diversification is concerned? You're talking about markets like US, which definitely should be in your portfolio for the purpose of diversification. But then, do you think it's time to, right now, if you have free money, just put it in the Indian markets and don't look at international diversification at the moment?
Well, frankly, at Emkay, we just do listed Indian equities. So we would always say India is the best, but I don't think we are the best judge to talk about the global allocations.
All right, Sachin, let me also ask you about, the FIIs. Let's expand a bit more on that. You said that you're looking India as an attractive market for investors, but you do have the US-China deal, at least the interim trade deal happening. So, of course, there is conjecture and there is expectation that there will be stability on that front, especially because of the fact that the United States actually cut more than China, 30% versus 10% that came in from China. Doesn't that pose as some sort of, counter to the India market? What do you think?
Well, we believe that these are very short-term headlines. The mega trend continues of the global alternate supply chains getting created across. It's a phenomena which has been happening for the last 10 years, which got even further accelerated post-COVID, I would say. And the fact that you can see some of the examples where the Apple has been talking about procuring more than 95% of their US sales from a country like India, right? So clearly they have been planning this for a while now, even before the tariff were in place or tariff announcements were there. So what I'm trying to say is that these are mega trends which are happening where clearly both US as a government and US corporates are very clear that they want to create alternate supply chains, and whichever country has the domain expertise over there will get their fair share.
Behavioral aspect of our investors, do you think Indian investors are actually maturing in terms of investment behavior and, the entire outlook of being a stay put, for short term or maybe the short termism? Is that still a challenge according to you?
Well, I think we've come a long way as far as the investor majority is concerned, and which is clearly reflected from the SIP monthly SIP number continuing to be very very steady at almost $3 billion in spite of one of the sharpest volatility that we've seen in the last, I would say, 7 to 8 months, right? So if you see from the highs of September 24 to March 25, we've seen sharp corrections anywhere in the range of 10 to 20%. And even during this period, we've seen that the SIP flows have been very, very steady. So I think investors definitely are taking a much longer term horizon in terms of their investment planning rather than thinking of this as a very short term income oriented investment. They are really thinking about this as their wealth creation rather than income orientation.
The show today. Thank you. All right, let's move on and